Hey everyone. Today we're going to break down the American market, take a look at a few instruments, and highlight the main points that I hope will help you make your trading decisions. It's been exactly 2 weeks since the last episode, so it's interesting to see what has happened during that time. Let's get started. Let's start with the Nasdaq. On the monthly chart, the trends and levels are still relevant. The price has almost reached the $30,000 level, and there has already been some reaction. Buying continues in terms of volume, but it's clear that the pressure is easing. Now, let's switch to the daily chart. The price keeps moving within the upward channel and has reached its upper boundary. Now, last episode, I actually predicted the price would move to the upper boundary, after which I expected a correction to begin. As we can see, everything is going according to the outline plan so far. Will this correction be as deep as I expect? That's a big question. Even though the price is turned around for now, I don't see strong selling pressure yet, but overall the picture is clear, and I think it's only a matter of time before selling volumes start to increase. I'm sticking to my chart-based expectations. So for those who are holding stocks in their portfolio, it's quite likely that now's the time to partially or fully lock in profits and wait out the correction. I think the correction will end around $26,000 per share. There's also a chance that the current high could be manipulated, and only after that will a deep correction follow. I think buying or adding more shares at the current level is a risky move. Yes, the price could go higher, but I consider that possibility to be minimal. Next up are Tesla shares. On the monthly chart, we're still moving within an upward trend. The levels from the previous review are still relevant. I'm just going to update the nearest support, shifting it a bit lower. The volume data all points to a continued rise in the asset's price in the future. Of course, the buying isn't as strong as I'd like, but I don't see any significant selling either. Let's switch to the daily chart. Here, the price continues to move according to the stated plan. At the moment, the price is correcting the previous upward movement, leaving price gaps behind. In the near future, either at the current level or just below it, I expect the current correction to end and the upward movement to resume, targeting $475 per share and most likely continuing within the upward channel. So, for those holding shares, there's just a little more waiting left to get through this correction. I think it's possible to buy more shares starting from the $400 level. I maintain my previous chart expectations. Next up are Nvidia shares and their monthly chart. The trends and levels remain relevant. The price continues to move within the upward trend and is heading toward its upper boundary. Earlier, I highlighted the level around $240 per share, expecting a reaction from sellers at that point. As we can see, the price hit that level and the expected reaction occurred. This is a capital redistribution zone, and only time will tell which direction the asset's price will move. It could either continue moving after a slight correction or reverse direction. Let's take a look at the daily chart. The target I previously mentioned has been reached, and right now we're seeing the beginning of a correction to the earlier growth. In my opinion, a more realistic scenario is for the correction to continue down to the $200 per share level, after which I expect growth to resume. I'll mark my expectations on the chart. So, for those holding shares in their portfolio, there are two options. Either lock in profits now and wait for new buying opportunities in the future, or take the risk and ride out the correction down to $200. The probability that the price will resume its growth is high, but no one can guarantee it. You should only consider buying more shares if there is strong buying activity at the $200 level. Hopefully, we'll see this in the next review. Next up is AMD stock and its monthly chart. The levels remain relevant. The price broke out of the trend, shot up into the stratosphere, and hit resistance at $450 per share. At this point, the chart stopped being informative. So let's switch to the daily chart and take a closer look at what's happening. In the previous review, I expected the price to keep rising, but only after a slight correction. As we can see, the price shot up without any corrections, and the previously mentioned target of $400 was reached. We can also see that it left a price gap behind, which usually gets filled. At the same time, we're currently seeing a strong price reversal. So I dare to suggest that a correction of the entire previous move has now begun. As a result of this correction, I see the price returning to the area around $275, after which I will expect its growth to resume. I'll illustrate my expectations on the chart. So, for those holding shares in their portfolio, the continuation of the asset's price growth is highly questionable. Most likely, it's necessary to lock in profits and wait for new opportunities, one of which could be a renewed growth from the $275 level. But whether that will happen, only time will tell. I believe that buying or adding more shares at this moment is very risky. So that's roughly how I see things playing out. And if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And remember, we can make predictions, but the market has the final say.